Hi everyone. This is HDIN Research presenting a strategic and financial performance review of Thai Oil Public Company Limited for the 2024 fiscal year. Our analysis, titled Sustainable Growth to Drive All Dreams, examines how the organization navigated a complex energy landscape while advancing its long-term transformation. This report is published as an open distribution version for 2026. Our presentation today follows a rigorous logical framework. We will begin with the situation of the global energy market, move into the complications regarding margins and operational hurdles, address the key questions facing the board, and finally, detail the answers, specifically the Clean Fuel Project and the 2S1P strategic roadmap. Let us transition to Section 1, where we analyze the financial stability and operating results of the group. In 2024, Thai Oil recorded sales revenue of 455.8 billion baht. While the top line remained relatively resilient with only a marginal 0.8% decline, EBITDA and net profit faced significant contraction, dropping by 37.9% and 48.8% respectively. This was primarily driven by compressed crack spreads in the middle distillate segment and localized operational shutdowns. Despite the profit compression, the balance sheet remains robust. With a current ratio of 1.7 and a net debt-to-equity ratio of 0.8, the company maintains its investment-grade status. Strategic liability management, including substantial USD bond buybacks, has successfully optimized the debt profile during a period of high interest rates. Moving to Section 2, we provide the macro context that influenced these financial outcomes. The global economy in 2024 was characterized by, quote, tempered growth. With China's GDP slightly underperforming and U.S. interest rates remaining elevated, global liquidity was constrained. In the oil market, Dubai crude averaged just under $80 per barrel as non-OPEC plus supply outpaced demand. HDIN Research projects a gradual demand recovery through 2025 and 2026. Domestically, Thailand saw a 1.8% growth in refined product consumption. The recovery in tourism drove an 18.3% surge in jet fuel demand. However, high household debt levels impacted the automotive sector, leading to stagnant diesel and gasoline growth. Despite these headwinds, Thai Oil maintained a dominant market share of 28.3%. Section 3 focuses on the operational core, how the refinery manages its assets and feedstocks. Thai Oil continues to leverage its strategic partnership with the PTT Group. Over 92% of crude feedstock is sourced from the Middle East to ensure supply security. Operationally, the refinery achieved a remarkable 110.5% utilization rate, significantly higher than regional peers, while simultaneously improving safety and productivity metrics. In a competitive landscape of over 1.2 million barrels per day in total Thai capacity, Thai Oil stands out with a Nelson Complexity Index of 9.8. Its strategic location at the Laem Chabang port and the ability to produce Euro 5 compliant fuels provide a distinct competitive moat over regional refiners. We now turn to the future-proofing of the company through the Clean Fuel Project. The CFP is the cornerstone of Thai Oil's future. By expanding capacity to 400,000 barrels per day and upgrading low-value fuel oil into high-value products, the project significantly enhances feedstock flexibility. With a total capex of approximately 7.1 billion United States dollars, full completion is targeted for late 2028. To navigate the energy transition, the group has shifted to the 2S1P framework. This involves strengthening the core refining business, sustaining the future through specialty chemicals and hydrogen, and powering the platform by expanding its logistics and distribution footprint into high-growth ASEAN markets like Vietnam and Indonesia. Section 5 details the company's commitment to environmental, social, and governance standards. Decarbonization is no longer optional. Thai Oil has established a clear pathway to net zero by 2060. This is supported by a three-pronged approach: cutting efficiency losses, compensating through large-scale reforestation, and controlling investment via internal carbon pricing. The organization's CARE strategy has resulted in high community engagement scores. Furthermore, the focus on human capital through the 702010 learning principle ensures the workforce is prepared for the shift toward new S-curve businesses. Finally, we look at the internal structures that manage enterprise risk. Governance at Thai Oil is characterized by a high degree of board independence and zero tolerance for corruption. The integrated GRC model ensures that compliance is embedded within the operating culture, as reflected in their consistent top-tier scores in governance checklists. Our analysis concludes with the risk matrix. Management has identified volatility in margins and the EV transition as primary long-term risks. Mitigation plans, including active hedging and diversification into non-oil sectors, are currently being executed to ensure long-term value preservation. In conclusion, Thai Oil is navigating a transitional era by balancing current operational efficiency with future-focused investments. At HDIN Research, we believe the execution of the CFP will be the primary determinant of the group's valuation in the coming decade. Thank you for your time. For in-depth market research, please contact sales@hdinresearch.com.